Congratulations on the numbers. You seem to do very nicely in these emerging market businesses. Let's talk a bit about Spain, though. Are you seeing a pickup in credit demand in the Spanish market?
Good morning, Anna, and thank you for having me here. Yes, the quarter showed the first increase in lending in the Spanish business, thanks to a very strong recovery that is taking place in the Spanish economy. As you're probably aware, our BBVA research team has very recently upgraded its GDP growth estimates for the country. Now they are expecting Spain to grow at over 3.3%. Unemployment figures came in extremely strong this week, and this is clearly a very good backdrop for the Spanish economy and the Spanish banking profits to continue to perform.
So that's the bull case, if you like, the strength, the recovery in the Spanish economy. On the other side of things, though, interest rates remain very low back at home. What can you do to try and mitigate the effects of those low interest rates?
We are defending margins. Customer spreads are flat in the quarter. This has been the case now for the last 3 quarters. We believe that we can continue to do so in the quarters ahead. But clearly, we need to be more efficient. This is one area where we are showing clearly additional strengths. Our costs are down by almost 5% year on year, and this is a trend that we believe that it will continue in the future.
As Anna mentioned, emerging markets were key and very strong for BBVA. Mexico is your biggest market. You had growth of 13.5% there. You had 12% growth in Turkey. Even bigger growth in the U.S., not an emerging market, obviously, but outside of Spain. Are there currency risks that concern you in those markets, and are you able to hedge them well?
Currencies behaved fairly well during the first half of the year. Latin American currencies are performing better than what we were expecting at the beginning of the year. Mexico, during the last 3-4 months, has recovered everything it lost after the election in the U.S., and probably the only currency, although stable the last quarter, that has lost some value year on year is the Turkish lira. The emerging market economies in general are behaving well, clearly outperforming the rest of Turkey. It showed very positive numbers in the first quarter, and that has led us to also raise the GDP growth estimates for the country to 5%. For 2017. Pretty impressive figures.
So you still expect, I mean, you're not concerned about geopolitical issues when we talk about Turkey, when we talk about Mexico, obviously, and the trade concerns that they may have with Donald Trump going forward?
I think the last few months, all discussions around NAFTA are being a lot more cautious. I think they are all looking for win-win situations that are good for both Canada, the U.S., and Mexico. And that's what we are expecting. It's not going to be an easy negotiation. It's not going to be a short negotiation. But we do believe that they are incentives for everyone to do a good deal. On the Turkish side, I think that since the election, Erdogan is focusing very much on running the economy. This has been one of his traditional strengths, and I think it's being reflected in the last changes that he did to his government, and is also being reflected in the GDP numbers. So although with uncertainties, that's always the case when you deal in emerging markets, we do believe that we have good quarters ahead.
Okay, so you remain optimistic on the EM story. Talking about Spain a little bit further, if we could, Jaime, we've seen, of course, the deal between Santander and Banco Popular. You didn't participate in that. You've said, or your business has said, you want to do more organic growth, not M&A. Will you look at other assets in Spain that might come up for sale? For example, if a German bank is selling some assets in Spain, will you look at those?
We actually take a look at every single transaction that takes place in every single one of our markets. But we not always win, and we not always beat for every single one of them. I think that's our responsibility, and whenever we feel that it creates shareholder value, we try to close them. The transaction that you mentioned, plus the integration of BMN into Bankia, those are positive transactions for the Spanish system as a whole. It will allow the banking system in the country to improve, to be more efficient. I think that's good for everybody. But as I said, if any transaction comes into the market, we will definitely take a look at it.
Your CET1 ratio stood at 11.1%. That's lower than the core European banks are aiming for or at right now. We talked about UBS at 13.5, Deutsche Bank at 14 and change. Where do you want to see that CET1 ratio go? Where do you need it?
Matt, we are very comfortable with our 11.1 CET1 ratio. Our target actually is slightly lower, is around 11%. Don't forget that with that 11.1%, we also have a leverage ratio, which is almost 6.8%, one of the highest among large European banks. And we have an asset density of around 53%, also very high numbers. So the quality of our capital is very strong. We've been able to generate organic capital quarter over quarter in a very consistent fashion. We are focused on profitable growth. So I feel very comfortable with the level that we have and with the organic capacity that the franchise has shown.